three subcategories. Number one being under asset under management 300 CR. Then our top performance between AUM 300 to 3000 CR. And then next top performance by above AUM 3000 CR. The other three categories would be top performing bank, top performing capital provider, top performing self-help group promoting institutions. With a background of the award ceremony, may I request our dignitaries to join us onto the stage for the award distribution ceremony. Please put your hands together as I invite on stage ED and CEO Sa-Dhan, Mr. G.G. Mamin. Very warm welcome to you, sir. May I also request Mr. Manoj Gulati, who is the Regional Director, South Asia Water.org, to join us onto the stage. I also invite on stage Chairperson Sa-Dhan and CMD Sa-Dhan Credit Care, Mr. H.P. Singh, to kindly join us onto the stage. I also invite on stage additional Managing Director, PKSF Bangladesh, Mr. Mohammad Fazlul Kadir. Very warm welcome to you, sir. We're also privileged to have with us Chairman VFS Capital and Amphi West Bengal, Mr. Ajit Kumar Maithi. May I request you, sir, to kindly join us inside. And also may I invite on stage Deputy Vice President ESAF Bank, Miss Anita Shekhar, to kindly join us onto the stage. Ladies and gentlemen, what a moment. This is where we celebrate the efforts put in, and we are going to present the award. And our first category is Microfinance Institution. It has, like I mentioned, three subcategories. Our first subcategory is Top Performing Microfinance Institution and NBFS under Asset Under Management 300 CR. The award goes to Grameen Shakti Microfinance Services Private Limited. Many congratulations to you. May I request our dignitaries to kindly present the award to Grameen Shakti Microfinance Services Private Limited. The top performing microfinance institution and NBFC under Asset Under Management 300 CR. Grameen Shakti Microfinance Services Private Limited. The award goes to Grameen Shakti Microfinance Services. Please put your hands together as the award is being received. Thank you so much. Our next award for the top performing microfinance institution and NBFC between Asset Under Management 300 to 3000 CR goes to Pahel Financial Services Private Limited. Many congratulations to Pahel Financial Services Private Limited. Many congratulations to you. May I request members from the Pahel Financial Services Private Limited to kindly join us onto the stage, and requesting our dignitaries to kindly present the award to Pahel Financial Services Private Limited. A huge round of applause for our awardee who's receiving the award under the top performing microfinance institution and NBFS FSC between Asset Under Management 300 and 3000 CR. Continuing with the award under the microfinance institution categories, the top performing microfinance institution and NBFC above Asset Under Management 3000 CR, IIFL Samasta Finance Limited. Requesting the members from Samasta Finance Limited to kindly join us onto the stage and receive the award. Once again, requesting our dignitaries on the dais to kindly present the award under the category of Top Performing Microfinance Institution and NBFC above AUM 3000 CR, IIFL Samasta Finance Limited. Many congratulations to you. The award is being received by Samasta Finance Limited. These were the three awards under the category of Microfinance Institution, the three subcategories. Now we move to the next award, which is the Top Performing Bank. The Top Performing Bank, the award goes to Unity Small Finance Bank Limited. May I request the members from the Unity Small Finance Bank Limited to kindly join us onto the stage to receive the award from our dignitaries. Once again, requesting our dignitaries to kindly present the award to Unity Small Finance Bank Limited for the top performance bank. Many congratulations to Unity Small Finance Bank Limited. It would be very encouraging to hear some more sound of the claps. Thank you. Our next award is about the top performing capital provider. Goes to Navsamruddhi Finance Limited. Many congratulations to Navsamruddhi Finance Limited. Congratulations to the team. This is the award under the category of top performing capital provider. A huge congratulations to you, and requesting the dignitaries on the dais to kindly present the award for the top performing capital provider, Navsamruddhi Finance Limited. Our next award is under the category of top performing self-help group promoting institution. Goes to Odisha Livelihoods Mission. Many congratulations to Odisha Livelihood Mission. This is the award under the category of top performing self-help group promoting institution. Thank you so much, dignitaries, for doing the honors. Ladies and gentlemen, with that, we conclude our award ceremony. May I request all our award winners to once again join us onto the stage for a group photograph with our dignitaries. Requesting all our award winners to kindly join us onto the stage for a group photograph. Requesting all the award winners to kindly join us on the stage for a group photograph. This was the award ceremony, the Sa-Dhan and Water.org awards for top contributing financial institutions in water and sanitation financing in India. Ladies and gentlemen, a huge round of applause for all our winners, for all their hard work, for their efforts, which is being recognized and being presented with an award, capturing in our cameras. With that, we conclude our award ceremony, and we thank all our dignitaries for doing the honors, and once again a huge amount of congratulations for all our award winners. Ladies and gentlemen, we now straight away move to our next plenary session. Our next plenary session is on the microfinance sector's role in fostering sustainable livelihoods. We have a thank you message, and may I request you, ma'am, to kindly proceed.
This is just to thank Sa-Dhan and Water.org for all the help that we have been receiving on the wash lending part in terms of the knowledge inputs, the sourcing, the technical support, and the hand-holding and capacity building. Thank you so much, very, very grateful. And may we take this forward, this mandate.
Welcome back, ladies and gentlemen. We are now moving to the plenary session 2. As mentioned earlier, the session is on the microfinance sector's role in fostering sustainable livelihoods. Ladies and gentlemen, please put your hands together as I invite the moderator of the session onto the stage, and I would also invite the distinguished speakers of the session. Inviting on stage the moderator of the session, Dr. Charan Singh, Non-Executive Chairman, Punjab and Sindh Bank. May I also invite the distinguished speakers of the session, Ms. Ittira Davis, who is the MD and CEO, Ujjivan Small Finance Bank. Mr. Ittira Davis. May we also invite on stage Mr. Rahul Gupta, Director and CEO, Avanti Finance Private Limited. May I also invite on stage Dr. Pushpa Pathak, who is the Senior Visiting Fellow, Center for Policy Research. I also invite on stage Mr. Ashutosh Mahajan, SVP, Head Rural Insurance and Virtual Offices, Future Generali India Insurance Company. Very warm welcome to you. May I also invite on stage Major Karthik, Chakrapani retired, Chief Business Officer, Pramerica Life Insurance onto the stage. Very warm welcome to you. Ladies and gentlemen, before I request the moderator of the session to take over, may I say a few words about the moderator of the session. May I request all our members on the dais to kindly be seated. Ladies and gentlemen, Dr. Charan Singh is the CEO and the founder director, Agro Foundation. He is also the non-executive chairman of the Punjab and Sindh Bank. Earlier, he was the RBI chair professor of economics at the prestigious Indian Institute of Management, Bangalore, India, senior economist at the IMF, Washington, D.C., and research director at the RBI. With those words, may I request you, sir, to kindly take over.
Good afternoon. At the outset, I must thank Mr. Gigi Memon for giving me this opportunity to interact with all of you. I have had the privilege of sharing my own work and also being on the board of NABARD Financial Services, where Mr. Gigi was the MD. I worked myself extensively in Bangalore area, Tumkur specifically, where I did research on microfinance institutions, and of course my experience with Mr. Gigi and NABARD Financial Services for a couple of years on the board. I have also been very privileged to have been working at the Reserve Bank of India for many years and also looking at this area of the microfinance sector. It's really a privilege to be here with all of you, share some of my thoughts, and also learn from the panel that I am chairing today, moderating today. And I must tell you that the issues that we have thought to bring forth before you, and some of the issues that we have discussed that we want to share with you, are on the frontier of activity on the microfinance. I'm really happy to note one of my gurus who has been working on this sector and who had really thought of business correspondence when he was at CAB Pune. Mr. Khan is here today and sitting amongst the audience. Initially, when I was at the Reserve Bank, he had been working at the College for Agriculture Banking. And that is the time when we were wondering what has to be done so that the banking penetration takes place deep, and banking penetration, that the very objective of nationalization that we had in 69 and 80, the very objective is achieved. The business correspondent model that Mr. Khan and his team had recommended then has been doing so well and extensively reaching out to all the people. I never knew that the idea that had been seeded then, I would be needing it so much actively when I chair a commercial bank. The self-help group idea, which was nurtured by NABARD, started in 1985, is another such idea which I thought has done exceedingly well in our country. How it, how it got all expanded and started doing the microfinance activity is also very enriching in experience. Today's session that we are here today takes a step ahead than all these things, or call it the stepping stones or the foundations that were laid by the self-help groups or the business correspondent model that had been conceived by the pundits earlier. The focus of the session today is on sustainable livelihoods. And I think, especially now, when I chair a commercial bank, the reach of a commercial bank is always limited and restricted. And that is one of the reasons in almost all forums now with the government, my interaction and scholarly conferences that I attend, I'm seeking a role wherein I say, if we have to become a $5 trillion economy, we have to become a $30 trillion economy, we have to become the third largest economy of the world, we need very clearly a roadmap which will tell this is the role of the commercial banks, this is the role of the NBFCs. And therefore, the roadmap has to clearly demarcate wherein the MFIs will come in, because the last mile cannot be covered, despite the very best efforts, only by commercial banks. The co-originating model becomes very significant. The business correspondent model obviously is operating and needs to be fine-tuned, and many a times I'm now beginning to think and articulate, do we need a special regulation, a special supervision for the non-banking finance companies, including the microfinance institutions? The role of the microfinance institutions in fostering sustainable livelihood, I think, is the next step. I must also share with you, in 2006, when I was at the Reserve Bank of India, I used to be thinking, can microfinance institutions, can the business correspondents have a dent in poverty reduction in our country? If yes, how? And what should be the time frame in which they can achieve this? What should be the sectors? Where all should the loans be extended so that in 5, 10 or 15 years, we are able to provide sustainable livelihood, housing, sanitation, better water conditions, and therein we are able to improve the quality of life. We are able to ensure a more nutritious diet, a more sustainable lifestyle for people living in rural and non-bankable areas. So today's session, with the title of Serving and Ensuring Sustainable Livelihood, becomes extremely important, and to my mind, it's going to be the next important thing after the journey of self-help groups and microfinance institutions. The questions that the panel is of course going to be answering is threefold, and as you can very well imagine, the questions are: what is the direct and indirect impact of the microfinance sector towards sustainable livelihood systems such as housing, water, sanitation, health? Financial literacy is something which we have all heard of. We have all been saying that we need this microfinance institutions to spread financial literacy. I think to a great extent it has been spread. The Jan-Dhan Yojana, the JAM Trinity has played a very prominent role in spreading the financial literacy. I think the next stage has to now come where more financial credit, more financial instruments have to become available, and credit through these more financial instruments has to be extended. How about social security, sustainable agri-food systems? And these are the areas which the learned panel is going to share their thoughts on. After discussing the direct and indirect impact of the microfinance institutions into sustainable livelihood, obviously the next question that arises is, what are the barriers, or what have been the barriers that we have not been able to, despite self-help groups starting in 1985, microfinance institutions coming close by, and then the BC model, what are the barriers that have been stopping us from achieving all this? In all these activities that we are talking of, the issue of finance comes in. And therefore the role that has to be played, the ecosystem that has to be supported by the government, philanthropists, and private capital work has also to be examined. The pattern that we are going to follow is, I'm going to invite my colleagues here on the panel to share their thoughts for the first few minutes. And then we'll have another interactive session amongst the panelists before we open up the session for question and answer to all of you. To join me in the panel, as you know, is Mr. Ittira Davis, MD and CEO, Ujjivan Small Finance Bank. Mr. Rahul Gupta, Director and CEO, Avanti Finance. Dr. Pushpa Pathak, Senior Visiting Fellow, Center for Policy Research on my left. Mr. Ashutosh Mahajan, Head Rural Insurance and Virtual Offices, Future General India Insurance Company. And Mr. Karthik Chakrapani, Chief Business Officer, Pramerica Life Insurance. I'm going to follow the sequence with which I have just shared the names with you, each panelist for about 5 minutes before we come back again. So, Mr. Ittira Davis, over to you, please.
Good evening. It's my privilege to be the first speaker. So before we talk about sustainability, I'd like to just take a minute to look back at where microfinance has been and where we have come. I think if we go back to 2010, when the Andhra crisis took place, the microfinance industry was in its challenging position. Things had to be done, things had to change. And we have not stopped in the last 13 years to look back and see where we have. I think if you consider the organizations that came into place, like the credit agencies which looked at microfinance, the High Mark, and all of these which came to play a role after the Andhra crisis, lot has been done in microfinance in India, and the varied panel that is sitting before you is an indication of the different ways in which we are approaching microfinance. I think it couldn't be a better way to look at sustainability from this very diverse group sitting here. So, I think when we look back and see that this particular industry has come out stronger than ever after COVID, it is an indication that we have done very well. And, take a moment, don't feel shy. Just give a clap to yourselves for having come out of COVID. I think this is fantastic. How many other industries, we were affected as a microfinance industry, we were affected during COVID. I keep saying that this is an act of God. You couldn't do anything. You had to take it as it came, you had to react. But the fact when COVID went away, we all came back with such strength is a signal and a sign that there is a maturity in this industry. And we have come to a crossroad where things have to move to the next step. And I think the fact that we are discussing sustainability is the indication that we are ready to take it to the next level. And unless we do that, we cannot stay ahead. And today, a lot of people, a lot of countries are looking to India, the microfinance industry in India, as a way for them to learn and to go ahead. And I think that's a very good place to be in, and that's a good place to be able to, give and share ideas. I think that is something which is very good. So congratulations to all of us around here before we move to the next. I think, I'm going to just spend a couple of minutes discussing the sustainability role and the other aspects of this discussion from the perspective of a small finance bank, and that is where, I'm coming from. See, the fact that Ujjivan, one of the 10 of us who got a banking license about 7 years ago and went from a microfinance institution to a small finance bank, is an indication of the evolution and the process in which the industry has grown. I think the regulators and all have realized that there has to be a change. And that change came about by moving from a position of a lender to a rounded banking service. So what we are trying to do today is that we have a customer, be it a GLG customer or an IL customer, who up to 7 years ago, we could only be doing lending to them. The moment we got a banking license, we were able to do a lot more services and products to the same customer. So that is the first step towards sustainability, towards building a longer term relationship. To that customer, I must say, I'm now looking at that customer not just staying with us for 1, 2, 3 cycles on the lending side. I am now looking at that customer to be with me as a customer for a much longer period. And I think the industry has to realize this. As we go forward, this is the way in which the sustainability has to grow. So, the way in which we now look at financial literacy, the way in we look at digital banking, that is the next steps, and my colleagues here will cover the digital aspects. So I think, those are parts which we have to play and to take this forward. So to me, to keep a customer which I could keep for 3 years or 4 years, if I can keep that customer with me for 10 years by providing more services, it is something that I'm able to do, and the customer gets a sustainable base, a level in which the customer is able to grow and move forward. And I think that is very important, because a customer needs to have the satisfaction that if they are a good customer, paying on time and other things, the organizations and banks that we are working with are going to recognize that. So my challenge to all of you as financiers is to say that if I have done 3 cycles and been a customer on time, paying on time, can I lend to this customer at 1 percentage point lower than I'm lending to somebody else, to the rest of the group? Acknowledge the fact that this customer is a good customer and needs to be rewarded for that. Because what we tend to do is sometimes we load the defaults from other customers onto good customers. That is not the way. Every one of us here, when we go to a bank for a loan, is looking for a better interest rate the next time around. So to sustain the movement in the microbank industry, we have to be able to look at the benefits which come from a good credit record and to take it forward in that nature. So finally, before I hand back, I'd like to say that sustainability is something that we can all achieve for in cross sections, and the next step is to be able to make strategic alliances. A NBFC with an insurance company, a bank with a fintech, or maybe 3 of us together to be able to provide the requirements of the customers. Because the customers' needs are growing, they are changing, and we need to be able to provide that support to make it a more wholesome approach to financing. Thank you.
Good afternoon, everyone. Thank you, Ittira. That was a great introduction. Just in the spirit of sort of looking ahead, I think one of the biggest gifts or catalysts for the next generation of financial inclusion and innovative models in India is our digital public infrastructure. Now, that sort of gives us the courage to think of asset-light, capital-light, scalable models. I'll talk a little bit about that. Through the day today, we've heard about the element of digitization or digitalization, but how does that sort of translate to our customer segment, where there is still some room for people to come up in their own digital journeys and their own digital literacy and bridge that gap. So Avanti, we are an NBFC, but we were conceptualized to be a financial inclusion platform where multiple actors of the ecosystem could come together on the demand side, on the capital aggregation side, and the co-creation of product side to build and offer customers products and services that were very much in line with their requirements, not straitjacketed, not limited to a group, and mirroring their cash flows. So there were a couple of things that we took encouragement from. Aadhaar, of course, being one of them, which gives, gives ubiquity in terms of identity. And now we all know about the progress of UPI, which is making payments democratized and there's ubiquity in payments. And of course, the fact that, the penetration of bank accounts is, almost about 800 million households in the country today. So we came out with a concept of operating model which would be paperless, presenceless, and cashless. So on the front end, we've tried to make the customer's journey very frictionless by having a very intuitive app which is used by the field officers of our channel partners. All the data self-declared by the customers is stored on our platform. And we've now done about 500,000 loans in the last 5 years of our launch, including navigating COVID, which are entirely through this paperless process. So the app by itself has hundreds of integrations. It's connected to banks, payment gateways, biometrics, credit bureau, completely mitigating the need to do any offline work for the organizations and agents that source for us. Very predictable in terms of turnaround time. So it takes about 20 minutes to onboard a customer. Technically, we can say yes or no within that time, but there is some additional due diligence, which is good practice, which happens at the field by our network of BCs across the country. So there's a very predictable turnaround to the customers of about 2 days' time of money into the bank. Presenceless, because we took a bet that there are many institutions in India which are serving the target audience that we set out to do, which is the microfinance segment or the unbanked or underbanked segment, that there were very well entrenched BC networks, there were new age agtech players which were reaching the same customers, there were embedded finance players on digitized value chains and dairy, etc., who we could partner with. So to Ittira's comment earlier, an age of sort of really building a partner network. And we have about 90 originating partners for us, which has allowed us in 5 years' time to be present in 26 states, close to 400 districts, and now we're serving 25,000 villages without a single branch of ours. We have only 80 people in our company. But through our originating partner network, there are about 1,300 field force officers, there are about 550 branches, so it's a very robust network that we have. What this does is it allows us to scale, keeps our cost low. Last element is on getting multiple pools of capital to lend. So we wanted to build a population scale platform, that is our goal. And it was very clear to us from the onset that we couldn't do it on a proprietary balance sheet. So we've designed our platform in a way where we can lend off our own balance sheet, we can co-lend. That co-lending journey has started for us in a very encouraging fashion, both with other NBFCs with sizable balance sheets, banks, where what we're essentially doing is bringing together the institutional balance sheets of large financial institutions, and where we are offering them our nationwide network, our digital spine, our ability to create hyper-local products which mirror the cash flows of our customers. And that's very important in terms of sustainability, because customers, if a customer is monetizing their crop once in 2 months, then they ideally want a repayment period which is once in 2 months. So we've designed our platform on the back, which gives complete flexibility to the customers in terms of choosing the repayments linked to their cash flows, which are daily repayments, weekly, fortnightly, something in the middle, bullet payments, so on and so forth. And that allows us to, even today we have almost about 200 plus variants of a traditional vanilla personal loan, which is unsecured, which is sort of mirrored to their needs, moratoriums, tenors, pricing, etc. And then there's one more piece of the puzzle, which is a tougher one to solve. But again, thinking of it from a future-led lens, is the element of cashless adding on to the paperless and presenceless that I mentioned. So today we have about 22% of our customers which repay us back digitally. And our belief is that it's very, very important to reduce the velocity of cash in the system. We do understand that the microfinance customers are very used to, they live their lives, there is still cash, and they are used to repaying by cash, and the channel is used to collecting. But we've set ourselves an ambitious goal that in the next 18 months or so, this number should be almost 75% cashless, which empowers our users, which reduces the sort of credit costs, and which will reduce friction on the field as well. We have some green shoot use cases where we are seeing through some of our partners where even though customers are brought into group settings for collections, but no cash is accepted, and almost 95% of the collections is happening cashless. So just to share, all of this put together, one, it'll increase the supply of capital to the people who need it the most, bring the cost down, and scalability of the platform will bring down the operating costs as well. Thank you.
Thank you. Thank you, Dr. Singh, fellow panelists and friends. I think I am really the odd woman out. Not only that I'm the only woman, I'm not from the financial sector. So I'm not sure if I fit here, but I will try and say something meaningful. So first I'd like to give my background. I'm an urban and regional development specialist, worked in several countries with the World Bank and UN Habitat, and now I am at the Center for Policy Research. And I do a significant amount of work on urban finance, urban local government finance particularly. And of late, I have also started working on finance for climate resilient cities. So that's a new avenue. So coming from that kind of background, I'm drawing from two of my earlier studies which had elements of microfinance. Women and poor low-income households, how did they access microfinance? So the first study I conducted when I was at the National Institute of Urban Affairs. It was about women in the urban informal sector, and it was completed in 1991, and the study focused on 6 cities in India: Bangalore, Lucknow, Visakhapatnam, Faridabad, Trichur, and Puri. And it had a sample of 1,200 women, a pretty large sample. And these women worked in different capacities as self-employed persons, as casual wage labor, home-based worker, piece rate workers, and only the self-employed women needed microfinance. And they would normally go to the high-cost money lender, which is the easiest thing to do, and would borrow money at the rate of 20 to 25%, which is excruciating. So of the 30% of self-employed women, only 1% had accessed institutions for borrowing a little bit larger amount of money. So my sample shows very little borrowing from institutions. The working capital requirement was very, very varied and complex, and I'm not going to go into this. But looking at the high cost of borrowing from moneylenders, a whole range of NGOs and self-help groups emerged, which our colleague has talked about earlier, and they started offering credit at 4 to 8%, which was a significant benefit, required little collateral other than membership of the institution, like Seva in Ahmedabad. Ilaben's picture is outside. She's a leader in this field. Working Women's Forum, J.R. Nachalam in Chennai. She was another leader in this field. So we have moved from there a long way. The second study I did was on electrification, citywide electrification in Ahmedabad. And here the effort was that Ahmedabad Municipal Corporation and Mahila Housing Trust, linked with Seva Bank, will offer credit for paying connection fee. So the connection fee was about 10,000, and household share was 3,350, and it's a very small credit, but it's significant for a poor household and improving their access to electricity. So based on these two examples, I look around today. So we have moved really from NGOs and self-help groups to a very wide range of institutions providing microfinance. Very important among these is the government itself through the national and state level programs, National Livelihood Missions, Jan Dhan Yojana, Pradhan Mantri Rozgar Yojana, Ajivika Finance for scheduled caste people, and state level programs like Kutumbashri in Kerala, Jivika in Bihar, e-rickshaw subsidy in Delhi, and so on. The list goes on. But a newer source of finance is vendor finance. Large companies, a big company, car making company like Maruti, comes up as a guarantor and borrows money from large banks and gives to their suppliers and affiliated companies. And giving example of Maruti again, takes the bulk credit and offers financing to about 2,000 smaller firms supplying parts and materials. Third category of new financing is online instant loans. Loans are being pushed on you. Every day you get message, loan chahiye, kuch paper nahi hoga, de denge jaldi se. So money is floating around. Earlier money was difficult, now there are no takers. The suppliers are becoming a little bit desperate. So that's online quite a lot. The question is that is the demand side not aware and requires literacy? or the supply side, there's too much money? I'm not sure. I think my fellow colleagues who know the financial sector perhaps should answer that question. I'm an outsider, as I said. Secondly, again, I'm going back to women because women are relatively disadvantaged in terms of accessing microfinance for various reasons. And also, there is relatively lower labor force participation of women in India, both in the urban and rural sector, at least the accounted participation. So, has the public provision of microfinance targeting women has created a new pool of women entrepreneurs? Is a question I have. Perhaps your database can answer. Now everything is digital, you have the information, perhaps you can answer that question. So the third observation is relating to digitalization, and it has facilitated access to microfinance. Online payment records like PayU, Paytm, etc. are now taken as proof of creditworthiness. Even for microfinancing small businesses like vegetable and fruit vendors, auto rickshaw drivers, tailors, and so on. But women do not have equal access to digital technology, poorer women, I mean. Many women don't even have smartphones and hence are disadvantaged. But during the pandemic, digital transactions had become particularly helpful for men and women both, for capex and loans, for new kinds of businesses that emerged during the pandemic, and one of them was running home kitchens. A lot of people were in a very difficult position and accessing food, medicine, different kinds of help, buying those kits, etc., was a big issue, and small finance helped. The second question that I have now for my colleagues is gender and sector-based data on credit available from financial institutions. Can it show us some trends? Difficult questions, you don't have to answer them now, but maybe someday when we meet again. So for now, Dr. Singh, I would like to stop here. Thank you.
Good evening, everyone. We were discussing about the pillars of social sector and this thing. MFIs, sustainability of MFIs, I feel is very much dependent on the insurance thing. Insurance actually supports the sustainability for the microfinance institutions, for the members, and for all the rural customers. The first thing that I would like to say is I consider myself very lucky. I started my career with the life insurance company that is pioneer in micro insurance. I got an opportunity to go to the field. I could attend more than 3,000 center meetings that gave us very in-depth and good knowledge about what are the products that are required and what are the actual requirements of customers. Then second thing, after completing 9 years in that life insurance company, I moved to the general insurance company, and in general insurance companies, we have been like graduating. Initially, when we took it over, we used to have forms, physical forms that were filled initially, and gradually then we moved to paperless processes. Then the policy distribution was also a challenge, and now we are able to issue the policies on WhatsApp, on SMS, and through mails as well. So that is how we are gradually modernizing our these things, our processes and our policies and our techniques. About the growth in micro insurance products, yeah, there is ample scope of growth with the kind of after pandemic, the kind of growth the micro insurance companies are showing. The microfinance companies are showing, we are also growing in the same way. And we have been able to help more than 30 lakh customers ensure their lives in terms of personal accident, in terms of hospital cash products, and also critical illnesses we could introduce to these markets. Initially, in general insurance, we used to give only hospital cash product. Then gradually, we started giving these products, the combination of these products, and right now we are also offering the products that can give you shop insurance, cattle insurance, and such products. So that is what we are doing. We are focusing on the technology, the new products. We are focusing on the learnings that we get from the partners, and that is how we are progressing further. Thank you.
Good evening. I think I'm the last one to go before we open up for questions within the panel and then outside with the audience. I think I'll start with what Dr. Singh you mentioned, right? You've got the dream or the vision for India to become the third largest economy, and the topic of the panel being sustainable livelihoods for the borrowers, right? I think both of them are linked. Why? If that has to happen, the length and the breadth of the economy in India has to widen, which means we've got to go deeper into the hinterlands in all facets, with all solutions and all products. And if we have to ensure sustainable livelihoods for our borrowers in the microfinance sector, which means the deeper penetration is what would be achieved. And the solution to both of these in this current context, in my view, is a semi-open ecosystem. Mr. Davis mentioned that it's kind of an ecosystem that is sitting here on the stage as a panel, right? But can we build an ecosystem far more robust, which can be, in a way, administered in its uniqueness, where at the center of that ecosystem is that borrower or the rural entrepreneur? I think that would be the right way of saying the journey from self-help groups to JLGs to now what can this entire industry transform into. Now, as an insurer, specifically a life insurer, Pramerica Life is sitting at the end of the value chain. When the borrower gets the credit and the microfinance institution has disbursed the credit is when I come into the picture, or the life insurer comes into the picture. Our vision is that if this ecosystem has to come alive, can we start at this beginning of the value chain and be in the journey as this value chain progresses, rather than sitting at the end of the value chain once the acquisition of the customer, the onboarding of the customer, the identification of the need, everything has already happened. So a large opportunity for us here, that's our vision. Why? Because as Pramerica Life Insurance, we are the only life insurance, and I proudly state that, which started its journey in a very segmented customer affinity model. We are the first in the industry and known for customer segmented approach towards the defense segment. Now, similar to a MFI rural entrepreneur, the defense personnel was looked at an anti-selection from an insurance perspective. Today, everybody from bank to an insurance company wants to kind of look at a soldier and his or her family. We were the first ones in 2009 to do that. And we kind of migrated and evolved that concept for paramilitary, police, etc. And for us, MFI plays a very, very key role because, like defense, the customer is known, the customer is visible, the needs are very, very curated, the need is very, very specific. So it is a natural extension of our competency when we started getting into the segment in 2016. And we are a very, very active player. So the thought of building that entire ecosystem, creating an entire network, Rahul mentioned it as partnership alliances. I would rather say what you're doing as bringing data, platform, and all the allied needs that a micro-rural entrepreneur needs at the doorstep is something that one can create to build that sustainable livelihood. To take an example, there are a lot of agro-tech and dairy, supply, I would say, rather last-mile organizations that operate today. What do they provide? They provide basic needs to an agriculturalist about, let's say, seeds or knowledge, or even helping them sell their final produce. can that ecosystem be embedded within the entire financing, insurance ecosystem, as well as the banking ecosystem, so that it becomes one holistic, semi-open, open ecosystem? I think that's the vision that now the microfinance industry or the financial services per se should drive towards at this stage, so that by 2047, the entire Amrit Kal, we're able to actually get that inclusion that all of us are looking for. We see a lot of impact in the areas that we operate in. So for us as an organization, social impact matters. So when we started the defense business, it was a social impact. When we got into the microfinance business, it was all about social impact also. So our shareholder, Prudential in US, runs a platform for the last 50 years across many countries in the world, which is called Emerging Visionaries. Every year, even in India, we go across and partner with 3,000 to 5,000 schools, where these schools take applications from students on their individual work of social impact. And a very empaneled jury kind of evaluates these applications, and we select close to around 20 odd students who are felicitated, and the top 2 are sent to the US to kind of learn more about what more they can do, get that knowledge. They're sponsored for around 3 odd months, and they come back. So why I'm talking about this platform is I want to tell a story about a girl that I met in March 2023 when we culminated the program for 2022. A girl from Tamil Nadu. Again, Dr. Singh, you mentioned in your morning speech that, South India, Andhra Pradesh, Tamil Nadu were the first forays into the microfinance. And this girl comes from Kumbakonam district, 13 years of age, Ranjita. And what did she do? She saw lack of toilets, people defecating outside in her village. She was very perturbed, 13 years old, and she picked up a water tank, a Syntex type of a water tank, and at the cost of 2,000 rupees, created a toilet. And that became so impactful that the entire JLGs and the SSGs that were operating in that district, because it is a very well-penetrated district from a microfinance perspective, they started looking at this as an enterprise. And across the district, around 100 odd villages adopted this model, this concept of 2,000 rupees worth toilet coming out of a Syntex tank, and it became a movement which was started by a 13-year-old girl. And I think that is the impact that microfinance brings in the lives of people. I think that is the impact that we want to get in. There were some talks in the morning panels about the penetration, 6.6 crores unique borrowers in 2023 coming in microfinance from a growth of probably 105% CAGR when you compare it with 2013. I would still say there's a lot more to do. And I think, Mr. Davis, you would agree with me, being in this, as a microfinance institution before you became a small finance bank, the rural population is still 90 crores. It's only the tip of the iceberg that one sees. And I think the opportunity, whether we look at it from an household perspective, and we look at, let's say, 25 crore households being currently empaneled as microfinance customers, I think it's still a tip of the iceberg. And there's much more to do, because there are many ways to impact their lives. And the thought process is, what can I, as an insurer, a life insurer? Nobody of you would get up in the morning and say, I want to buy a life insurance policy today. You would generally go and say, I want to renew my motor insurance policy, or I need a health insurance policy. Unfortunately, it does not happen for life insurance. And a little bit of a bad connotation here, but during COVID, the number of people requiring hospitals was as much as the number of people whose bodies were lined up outside cemeteries, right? But still, the need for life insurance is not so pronounced. Our vision is that what can we do to work in a complete financial inclusive methodology to generate that need, that people need life insurance. And what can you do to help them sustain their livelihoods? The real sustenance of the livelihood happens when the breadwinner is no longer in the family. So that's the vision that we're living with. And I think there's so much of opportunity on this topic that one can get into. Thank you.
So we have had the first round of observations, and I am sure you will agree with me, each one of them are doing extraordinary work. I must also share one thing with you. In 2006, I had just returned from Stanford and Harvard after 3 years, and I was told to look at the microfinance chapter called the Financial Inclusion in the statutory report of the Reserve Bank of India. I was the Director Research of Reserve Bank of India for banking, and that's the first time a separate chapter was given in the statutory report called the Report on Trend and Progress of Banking in India. To write that chapter, I must have spent about 10 Sundays and Saturdays doing survey in Bombay, in the slum areas of Bombay, with the cobblers of Bombay, with the famous dabbawalas of Bombay, auto rickshaws, taxi drivers. And I tell you, I was so surprised that the cobbler sitting bang opposite in Kafpred, in bang opposite State Bank of India, couldn't not open an account in that branch. And when I sat with this guy and he had Ravidas photo in front of him and I told him things about Ravidas and he became friendly after my 4th visit. Then I told him, I said, do you have an account in this bank? He said, no sir, all the employees, there are 80 of them there. They bring their shoes, I repair their shoes, their chappals, their purse. Also their family shoes, chappals I repair, but I can't go inside to open an account because that security guard standing there with the gun will kill me. So I said, okay, but remember we had started the opening an account at that time, zero balance accounts. He couldn't go in. So I thought, and I was the GM in the Reserve Bank, I thought I'll put my driver and let me check if my driver can open an account in that branch. Even he couldn't go it. And when he went, all the documents, madam, which you were referring, they were asking, and he was staying in one of those places in Navy Nagar. So I brought this to the notice of, earlier I had brought it to the notice in a different context to one of our deputy governors, the famous Mr. Tarapur. He experimented the same thing with his driver and he couldn't open it. So much has happened over the years, and believe me, sitting amongst all of you, I'm feeling so privileged that what at that point of time we had thought we will start and we were not able to do it. The Bombay Dabbawalas were asking me, sir, why do you want us to open an account? We don't want to get into opening an account and those people knowing how much we earn, what we earn, where we go. And today, the way the panel has brought up for our knowledge, you have, without a brick and mortar branch, you have so much of business. And the journey which Mr. Davis has as a small bank, and the insurance product, I'm so impressed with what you have just told me, both of you from the insurance sector. In 2006, when I was doing the surveys, leave aside, the bank opening an account for these people was difficult. Leave aside a sophisticated product like an insurance. And I asked the head, and I was doing this survey with the head load workers in that famous Crawford market. And I was talking to the head load workers, and I was talking to them about a bank account, and they looked at me, are you mad? Can I open a bank account? Do you think I'm bank worthy? And I told him, you can. And he said, sir, today is Sunday, we have business to do. Please don't waste our time. I'm so impressed that in the last 20 odd years, so much of activities, and this has actually happened because everybody came into the field. And as you said, your long journey of insurance, and then you didn't, I think that has really mattered a lot. Suddenly, according to me, after the Jam Trinity or after the Jan-Dhan, the word became important. People started realizing there is gold under the pyramid. And I think that made a significant difference. And of course, Andhra experiment opened eyes of many of people there. Well, the journey has been beautiful as I see it, and I'm so impressed with the observations made so far. I think instead of taking a second round, if my co-panelists agree, can we go directly to the audience? Right? Let's go straight to the audience, and we would love to have your questions and maybe your observations where we all can learn together on this journey. Yep. I must share with you while the mic is reaching here, I must share a story of, in the Cuff Parade area, the story of a banana seller. I was interviewing this banana seller. I never knew that even a banana seller who does it on his head, how many rounds he does. He has clearly identified the timing of the pedestrians going towards Churchgate. In the evening, they are returning back. And he had 4 rounds of banana selling. And then in between, he would take intervals when there would be nobody. And therefore, he could relax. The issue was when I asked him, you do 4 rounds of selling bananas. You are not from Bombay. You obviously don't live in Cuff Parade. Where are you from? So he told me a place about 100 kilometers away. And I said, okay, do you go home every night? He said, no, I can't. Because the last banana I sell is the pedestrians coming by 10:30. They walk by this place and go to the slum in Navy Nagar. And the first one starts at 5:30. And therefore, I have to have bananas ready with me at 5:30 and some bananas at 10:30 in the night. I can't go home. Where do you keep the money that you earn? And he said, I keep it closest to my body so that even when I'm napping or in middle of the night I'm sleeping, that money can't be stolen. And I told him, if you open a bank account, no, he said, that story is, sir, I can't open a bank account. Why are you even telling me that? And so he told me the places he would hide the money every night on his body so that it couldn't be stolen. This is the story I'm narrating with you of banana seller in Cuff Parade that I interviewed in 2006. And today, the way, at least in urban areas, MFIs have penetrated and ensured that that sort of a situation doesn't happen. Means listening to all of you, I feel like going back and visiting the same people after now 20 years and seeing have they been able to open an account and what is their story like. Sorry I took this extra time. Yes, please.
Thank you very much, sir. This is Shohrab, Deputy Executive Director and TMSS in Bangladesh. Basically, TMSS is one of the largest MFI and NGOs in our country. We have heard in our first plenary session, one speaker said, and 50 to 60% borrower of microfinance in India are engaged in agricultural activity. So, I would like to request Mr. Karthik, Honorable Chief Business Officer of Pramerica Life Insurance Company, out of life insurance, what are the insurance activity or risk mitigation services for the microfinance borrower in India, please?
I would request, we'll take a few questions and then because we are running out of time. Can we take a few more questions and then the panel? Please share your name. Also, please tell us to whom your question is pointed at. Anyone else? Anyone else? Please. Yep.
Good afternoon. This is Zubair from Bangladesh, and I'm also a representative of one of the microfinance organizations. My question is all respected dignitaries. That's how do you integrate the access to finance as a human rights for the community, as we are talking about the issue of water sanitation hygiene and also the health as well as the vulnerability of the poorest of the poor. Thank you.
You know, there's so much to learn from Bangladesh on microfinance. We ourselves have been reading about Muhammad Yunus' work so extensively and taking guidance from that. Any more questions, please? Anybody else? Okay, so we have two questions here, and obviously. Yeah, there's a question up there. Can we please, you could come close to the mic, yes. You could come here, please. They must be doing the recording. That's why we are saying come near the mic.
Yeah, this is fine. Hi, good afternoon, everyone. My question is, since 2 decades, microfinance has evolved a lot, but still with so many players coming into the sectors and product diversification is also happening. But do you think that social empowerment in terms of the livelihood has increased? Do we still realize that, social performance measurement like tools should be included amongst players so that, we understand their actual need? Because, many of the MFI players are operating in same geography, targeting the same beneficiaries. And it's, cycle-based lending happening. So what are the methods that sector should think upon where, we actually bring the real livelihood enhancement tools and development assessments? Thank you.
Thank you. Any more questions, please? I think we've really had 3 very good questions. You could take the one on insurance. I think the one on livelihood, you could probably, I have my own thoughts, but I think I would like to first go with the panel. So please go ahead with the one on insurance.
Sure. So thank you for that question. So on insurance, when we say that 50% of the borrowers are today agriculturists in India, and what do we do in terms of risk mitigation, if I'm understanding that? Unfortunately, today the microfinance insurance, the way I call that, in terms of life, is happening at the borrower's whatever outstanding loan or the loan that he or she has kind of obtained, mainly she, through the JLGs, from the microfinance institution. And that's how we underwrite it on a group platform, because it's a group-sized loan. The reason, so the mitigation techniques are basis whatever KYCs and credit scoring, which is now completely digital in microfinance, that comes to us directly. So there's a lot of data sharing that is happening, which is good. So it's not unfortunate, it's fortunate. And there is seamless data sharing happening because microfinance institutions are following a paperless route. We are also following a paperless route, and the systems speak to each other. There are data APIs that are being built with microfinance institutions, and we're able to get all the required KYCs and the entire credit rating assessments for us to do a group level underwriting. Why did I say unfortunately is because the real underwriting of understanding the risk of the borrower will happen when I am able to underwrite the borrower on an individual life insurance basis. That today is not there. That borrower has yet not reached the mainstream insurance. What is, you are today in the mainstream insurance. Everyone sitting here in the room is, but he's not or she's not. So that's still a long way to go to understand the underwriting concepts like credit concepts, credit rating concepts that happen in MFI. When they are lending, there are underwriting concepts that have to be built in within an insurance company from a mortality and a morbidity perspective. For that kind of life at an individual level is still not built in completely. So I think that's a little bit of a long way to go. And this ecosystem that I spoke of will give us enough data and insights for us to build those underwriting engines and machines through either AI or machine learning.
I think there was one part of a question or a question on livelihoods. And I think the whole genesis actually of the microfinance industry and all of us who are participating in it is to help build sustainable livelihoods. Because we also realize today that a lot of our borrowers are one event away from putting them back in poverty, even if they have sort of gone up on the income chain. So this is a continuous journey. I think there are a couple of elements that one can briefly touch upon. One is, how do you design human-centric products, not just gender-centric products, which are very catered to what our users need. In my opening, I had shared about hyper-localization of products, and that's where a few things need to play out. One is the sort of transition from a group or JLG context, which had a time in its place when people did not have unique identity. The mitigation of social collateral to offset data dark customers was very critical. But today, there are more and more people who are part of the bureau. There are other social trust signals that you can pick up from the market. And one has to start assessing people as individual borrowers, not necessarily as a construct from the group. And that journey has started. That also then leads to understanding the kind of loan products which would help in them building sustainable livelihoods, which is the amount of loan required. So if somebody wants to buy, cattle, 2 cows, and if the cost is 90,000, then are you really solving for anything by subjecting them to a cycle-based lending of 25,000 in first cycle and 35,000 in second cycle, versus being able to ascertain the cash flow-based lending that may enable them to get at least close to what they require, if not the full thing. And that's kind of where the sort of mass customization at scale from a technology perspective has to be built in. So one is sort of, how does technology enable the development of products? So the customers are not given straight jacketed products, and that can't just happen on the fly, because if you're going to cater to moratoriums, extended loan periods, multiple repayment options, that has to be digitally driven. And then of course, is the whole sort of social change that has to come in terms of moving from group-based lending to individual lending. So just, one viewpoint on that.
Yeah, I think the changes which have taken place, are helping livelihoods. Now, for example, Dr. Charan talked about the shoemaker or the shoe repairer and the banana person. Today, many of them carry their own QR codes, and that is their account, and that is linked. And today, the customer, many of these customers are having bankers come to them and open the accounts. Life has changed. It's the way things have moved forward. And that is really empowerment, and that is really the way in which things have to go forward. But having said that, the whole pyramid structure which we saw in the country with people at the bottom of the pyramid, that is changing, and that is what makes life interesting. That is now becoming more like a diamond. There is an upward movement of the bottom of the pyramid, and perhaps a few new people are coming into that, but the upward movement is what we need, and that is the sustainability. People at the bottom of the pyramid cannot remain forever at the bottom of the pyramid. They need to move up, and we have to encourage that movement upwards as an industry. And whatever that needs to take them up is what we need to put in place. And that's how livelihoods are built, and we try to encourage and don't leave anybody behind. Thank you.
I must add here the point that you have just made, Mr. Davis, is so beautiful. I go back to the surveys that I used to be doing then on Sundays. I met this auto rickshaw driver and I told him, how much money do you make in a day? And nobody will open up on such issues in the first meeting. So I cultivated with them. They saw me, I'm probably a scholarly type person doing some research. And over a few weeks, then I was able to talk to them. One morning, this guy told me, sir, you have been asking me this question repeatedly. This is how much I make. And I said, where do you keep it? Because he said, I share a room in Kurla and we are 8 auto rickshaw drivers. We come from the same area, not same village. We are 8. We take shifts. We sleep there. We drive this auto rickshaw in taxis. This is the amount of living. So where do you keep the money in the night? Can't keep it, sir, in the rooms. Not very safe after a certain limit. So what do you do? Then he told me, at any point of time, I can call up the money carrier. He'll meet me at the closest juncture. I hand over the money. Within 2 hours, it reaches my house back home in Bihar. So I did a mental calculation back of the envelope and said, okay, there are this many auto rickshaw drivers in Bombay, these many taxi drivers. A thumb rule, these many are outside Bombay, these many are outside Maharashtra. How much money is getting transacted? And then we looked at, there's a close-in figure that we reached. And this money was not even entering the banking system. When it doesn't enter the banking system, of course, the saver is running the risk, and the institutions which are professional and can use the resources for national development are losing on that. So what you just mentioned, the banana seller, you are right, even today has the QR code. The money is entering the system and serving a very important purpose. I think that's a very big transformation that has taken place. If there are no more questions, Professor Pushpa has asked us a number of questions. I would request the panelists, you could come to the mic please. We could ask the panelists to take this question as well as the gender question. And there was this question which said that what percentage of people, if 52% are in the rural areas, how's their accounting pattern and how's, if anybody has an answer, we could take that. That's been answered to the extent of the insurance thing. Okay.
Good evening, great panel. My name is Shashidhar. So I started in this microfinance industry in 1998 and 2023, 25 years. When we started giving our first loan, I worked for an organization which started commercial microfinance in the country called Basics. We charged 24% interest rates those days. And today, the average interest rates that we charge in the industry is around 25%. But a lot has happened in 25 years. Digitization, efficiency, scale, name it. You know, everything benefits, should benefit. But interest rates have not come down. So when we talk about sustainable livelihoods, I think that's a very important aspect of what is the cost to the customer. And the cost to the customer has not, rather has gone up in 25 years. In real terms, it has actually gone up. In nominal terms, it's same. So anyone can add anything on why do you think that has happened and what should we do to quickly change that? Will be useful. Thank you.
Yeah, please come. What's the time we have, the organizers? 5 more minutes? Okay. Let's take it. Yeah.
If you see that one, there were corporate failures because of, there will be more, that is as far as NPS one portion. And there are also this, loan waiver schemes because of that. There could be chances for this mentality of this, the borrowers to skip the installment and all. But we are finding it in microfinance. We are also making audit and other things. The success rate is very high. That is the NPA percentage also. What is any secret behind that and how the, in what manner and how they manage that one, that is, this particular disease is not infected in those microfinance borrowers.
Thank you. Any more questions, please? We can take one more question. We have been given 5 minutes. Okay, if there are none, then I want to request the panelists, I'm prompted by the question that he has asked. I was a commercial banker myself in 1983, and some of the customers who would come to us, and I was a commercial banker, they would show their frustration. Why do you need so many documents? So one day I thought I will go and myself see how the money lender works. So I bought my first television set from a money lender's money. I went to the money lender and I told him I want this TV to be bought. He asked me, where do you stay and what TV? I told him, this is my place of stay and this is the TV. Have you seen it any showroom? I said, yes. Which is the showroom? That. Okay. In about 10 minutes time, you just mentioned that we are able to approve the loan. In about 10 minutes time, he made me wait outside and then he called me in his room and he said, by when do you want the TV? I said, today evening. It'll be at your house. It was. My question to you who are in the field, what is it that despite years and years and years of effort, the money lender still survives and survives in the same locality where you and me live? We all hate the money lender when we talk in panels like this, but when we need really money, the money lender is still sitting there helping us. His children play with our children, his wife, his parents, they interact in the same mandir, same club, and they survive. The point that you mentioned about the interest rate, sir, is really surprising. Is 24% too high? I was a commercial banker when I first bought my first TV set from the money lender. And interest rate was not a consideration at that time. To me, it was the ease and the early TV that I wanted in my house. So I would really like to hear from my co-panelists, because you are the practitioners, what is that you think is the appropriate interest rate? Do you think it is really high as he mentions? And if it is high, you are charging 24. The money lender certainly uses your interest rate as a benchmark and puts another risk premium on it and charges at least 30. How does this system work? So I would probably start with you. And madam has a question on gender, if you could weave.
It's not on gender. Yeah. It's on money.
On money. Yeah, but
so
not gender related.
I'll give a perspective from an early stage financial institution, and then I'll request Ittira to give it from a sizable small finance bank lens. So I think, Sashi, the answer I'm going to give to you is not going to surprise you at all. So unfortunately, there's no magic bullet here. So if we really look at our business, from a pricing waterfall perspective, it's cost of capital, cost of credit, cost of operations. Now, one very good thing that happens in our user segment is that the cost of credit still continues to be low. So you may have ups and downs, cycles, you have one-off events, you have force majeure events, but the industry has been very, very resilient, which we have seen over the last decade and a half and more. So that's sort of the tailwind, that's the good thing. I think on the cost of operations, hopefully over a period of time, when sort of the jugalbandi of digital onboarding, digital business rules engine, all of that comes together, some of that cost of operations is going to come down, because today it's a little, what I would say, there is some redundancy, because whilst you may have tools to enable digitization and reduce costs, the processes on the ground don't change. So I'd earlier shared an example where one of our partners in Karnataka serving the same kind of customer segment that we serve all across the country. Their institution manages to collect digitally directly from the borrowers. About 90% of the repayments are digital. But they still call the customers at the center meeting. So that process has not changed. So it's a good tool that is happening, but the cost of operations has not gone down. And in discussions with them, the answer is, it's a gated process. We first got customers to feel comfortable about repaying digitally. Now the next step is that if you've done it a few times, why do you have to come to a center meeting? And you can do it from the convenience of your location. And then the sort of agent to customer ratios, etc., in the industry will improve, and that should bring down one element of the cost. And I think this whole cashless journey, I keep talking about it because it's a big lever in the operating costs. It is, if you really want to move the needle, the velocity of cash has to come down. And the second, and then we come back to sort of the cost of capital. Now, again, as an early stage entity, even for us, the cost of capital is 12%, 13%. So that's where you start from. And you're starting from 12 to 13% with an acquisition cost that could be anything from 3% to 8%. It's very, very difficult to come down below the rates that are being charged in the industry today. And if you look at sort of the harmonization of regulations that happened for the microfinance segment, actually interest rates have gone up after that. And the reason is because many of the entities were going to fall off a cliff. If they were not, if the regulations had not changed and they were not allowed to charge more, they would have actually gone out of business. The money lenders would have come more into the market. So, it's those sort of simple levers that have to change, but I think we just have to sort of keep progressing in the right direction. And I myself, as a practitioner in the industry, certainly, this is something that we have to address.
I think, it's a difficult time to talk about the interest rate differential. Because, all of us know, since May 22, the repo rate has gone up by 2.5%. So if you were lending at X in May 22, your cost would be at least around the same 2.5%. Reserve Bank of India has raised the repo rates 2.5%. So I think it's a difficult environment to compare today because the interest rate cycle has moved up. But I think in a few months' time, I think the question which Sashi asked, we will all have to ask ourselves that question. As the interest rates come down, are you still going to charge 25%? I think that is really the answer which we all need to think of. And I think that is where, the changes which were proposed by the Reserve Bank will have to be looked at very carefully by each lender. Because that is not what was the purpose of that, but unfortunately it came at a time when interest rates were rising. So obviously, if you were lending at 22% in May 22, in September 23, you will have to be lending at a higher rate, assuming that you are paying the additional cost. But come September or October next year, things hopefully will change, interest rates will be down, and the question will be in front of you. What are you going to be charging your customers? And I think we better have right answers for that.
The organizers have requested me to conclude fast, but I'd still think if my three other co-panelists would like to briefly make an observation, you're most welcome. Anything you would like to, you said you have something to...
So just on the question on impact, I think in the paucity of time, I think the impact that's not visible, a gentleman had asked about it. I think the visibility of the impact will come when you know what livelihood are you impacting by lending as well as insuring. That visibility does not exist today. And it's more assisted in terms of the onboarding. If that visibility comes, I think that impact would be clearly visible. I'm sure the borrowers who are gone on to cycle 1 to cycle 2 to cycle 3, they would definitely say their lives have got impacted. But that visibility to all of us is probably not so coherent. Thank you.
Right. So I think with this excellent quality of discussion, very high standard. And the panel was so representative of the frontiers as well as at the grassroots, technology, as well as something which we are so much familiar with, brick and mortar. And the questions were excellent. I thank all of you. I only wish the regulation of this sector improves. I also wish a standard complaint by the regulator and supervisor that the governance norms and the boards have to be more professional, probably have to be trained more professionally. If we are looking for a country to be the third largest in the world, every segment of the financial sector will have to be professional. And to bring in that professionalism, I think the last man on the street or the last MFI that is registered will have to also be professionalized. So while the banking penetration, the penetration of insurance products and credit products have to expand, I think professionalism has also to expand. The training has also has to happen. As the products have changed, so has the training. As I mentioned, my own surveys 20 years ago, and the story that we heard today, the banana sellers having their own QR, so much has happened in this journey. I think the boards and the governance norms have also to match and to keep up with the dream that we have for the next 25 years. During this Amrit Kal, we need to build it up. Thank you again to the organizers for giving us this opportunity.
Thank you so much, moderator of the session, Dr. Charan Singh. Thank you so much, distinguished speakers of the session, for that very informative and interactive session. Thank you once again. We would like to present memento to our panelists, and may I request the CMD Sa-Dhan Credit Care and also the chairperson of Sa-Dhan, Mr. H.P. Singh, to kindly join us onto the stage. Please put your hands together as we now thank by presenting a memento to the moderator of the session, Dr. Charan Singh. A huge round of applause as we thank the moderator of the session, Dr. Charan Singh, requesting Mr. H.P. Singh to kindly present the memento to the chairperson, to the moderator of the session. Presenting a shawl and a plaque. We would now like to present a memento to Mr. Ittira Davis. Thank you so much, sir, for your valuable input. A huge round of applause for Mr. Ittira Davis, presenting a shawl and a plaque. We also thank Mr. Rahul Gupta. Thank you so much, sir, for your contribution. And we would now like to present a memento to you, sir. Presenting a memento to Mr. Rahul Gupta, a plaque and a shawl. Once again, requesting Mr. H.P. Singh to kindly present a memento to Dr. Pushpa Pathak. Thank you so much, Dr. Pushpa Pathak, for your valuable inputs. And we present a plaque to Dr. Pushpa Pathak. We also extend our heartfelt gratitude to Mr. Ashutosh Mahajan. Thank you so much, sir, for joining us today and sharing your thoughts. Presenting a shawl and a plaque. A huge round of applause for Mr. Ashutosh Mahajan. We now thank Major Karthik Chakrapani. Thank you so much, sir, for your interactive session. Thank you so much for your sharing your information with us. Presenting a plaque to Major Karthik Chakrapani, requesting Mr. H.P. Singh to present the same. Now may I request all our panelists and also Mr. H.P. Singh to kindly step forward for a group photograph. A huge round of applause for our panelists for a wonderful session, very informative and I must say, an interactive session. I'm sure we have more to discuss, which we can definitely take offline, ladies and gentlemen. With that, we are concluding the day 1 of the conference. This was the plenary session 2, with the microfinance sector's role in fostering sustainable livelihoods. That was the topic, and we had a huge discussion, and we can take some more interaction offline. Thank you once again. Please take care. Namaskar. I'm Sushmita, signing off from the podium.